Hello, my name is Jim Wade. I'm a tax attorney here in Maine, and I help taxpayers resolve their IRS tax debts once and for all. And in this episode, we're going to be talking again about IRS tax liens, specifically how to remove them. Okay, let me start by saying it is not easily done. Um, if you're dealing with the IRS and you've had money or property seized, often you can get the IRS to back off if you work out some sort of payment plan with them. Not so with tax liens. Now remember, a levy is an asset seizure where the IRS physically takes your property or takes your property by other means, whereas a lien is a charge, as they call it, against your property, an encumbrance, meaning that if the property is sold or transferred, the IRS still has that as, I guess you could say, for lack of a better term, collateral to pay the tax debt. It considers it the least intrusive means to collect. Tax liens, especially when they're filed in the registry where there's a notice of federal tax lien, tends to encourage taxpayers to resolve their tax debts. So the IRS considers it one of the most effective means of collection, and they're not willingly going to give it up unless you've got some pretty good grounds for it. Now, let's just as a reminder, if you haven't watched previous videos, there is a silent lien and the notice of federal tax lien. For most people, when you get notified that the IRS is filing a lien against you, that is that notice of federal tax lien. That tells the world that you have a tax problem. But it itself is not the federal tax lien. That is what's called the silent lien. So when you've been given a bill by the IRS and you haven't paid upon demand and notice, 10 days later, if you haven't paid, a lien arises in the government's favor, automatically by law. Only you and the IRS know about it, but there it is. So a lot of what we're going to be talking about is how to remove the notice of federal tax lien. You're not often going to get the silent lien removed unless your property is being sold, and then what will happen is the IRS will remove it so that you can get the property sold and you can get paid. So just keep that in mind. Many people get very upset when they get the notice of federal tax lien removed and suddenly realize the lien is still there. The IRS is very rarely going to get rid of that lien. So just keep that in mind. What we're going to be talking about for options are just ways to sort of mitigate, for the most part, the tax lien's impact on your life. And we talked about that in a previous video. You can always go back and listen to that. So here are your options. And I put the first one in sort of in jest because the IRS puts it on their website saying, hey, how do you get a tax lien removed, that notice of federal tax lien? Well, you could pay it off. Well, duh, it seems, Captain Obvious here. I think for most people, if they could full pay, they would, or they'd work something out to get it resolved quickly. However, if you can't fully pay it off, well, you do have some options for getting that lien removed or the notice of federal tax lien removed. So the first thing we're going to talk about is the discharge. Discharging the lien removes the notice and the lien itself from the property. This is something that the IRS is going to approve before you do it, and this is often done when you sell property. Or there are some other reasons to have it removed if you've got, say, property with twice the value of the outstanding tax debt, I believe. There's some exceptions, but generally, if you have a notice of federal tax lien on your property, you want it discharged so you can sell it. So if you're someone who is selling your home, you're looking for a discharge. So that now the property can be sold free and clear, the IRS gets paid what it can, and you can then sort of get out from under that property. The lien, the notice of federal tax lien, can also be withdrawn if you can show that there are some good reasons for it. So generally, if you're looking for a withdrawal, it's that you'd lose your job. Let's say you're in the military and having a tax lien would be a reason why you'd lose your security clearance and hence your job. You would request a withdrawal. The same applies for people who work in the public sector where your job, you, as one of the terms of you keeping your job is not having a federal tax lien against you, then you could get it withdrawn. There are other reasons to get it withdrawn. If, for example, it impacts you negatively, such to the extent that it would be more effective for both you and the IRS to have that notice of federal tax lien withdrawn. I can't really think of any circumstance where that will happen, but it is at least available as an option. Then we have subordination. So if you've got property where there's some value in it and a bank is willing to refinance, you might be able to get a subordination, which is where the government will move its lien from the property and place it behind the person who is going to lend to you. So bank says, well, based on your property's value, we'll lend you $100,000. IRS says, okay, we will go behind the bank for that $100,000. In return, the IRS is going to receive that $100,000. So if you're thinking, hey, I want to get subordination, just so I can, do a cash out refinance to fix my house or do some other things that will make me a better candidate, that will help me pay back the IRS quicker, not likely to happen. If you're going to do a subordination, whatever you're going to get from the bank is going to go to the IRS. There are some circumstances where you might be able to get a cash out if it's very advantageous to the IRS, but very rarely. Then there's this final option, which I think a lot of people should know about. If you owe less than $25,000, if you set up a direct debit installment agreement with the IRS, meaning the IRS takes the money directly out of your bank account, then you can, if you make 3 payments, have the notice of federal tax lien withdrawn. For many people, most people owe less than $25,000. So this is a huge benefit. You get into this direct payment installment agreement with the IRS, pay off 3 payments, you get it withdrawn, and everyone's happy. So those are the options. A discharge is where the silent lien and the notice of federal tax lien are removed so the property can be sold. Withdrawal is where the notice of federal tax lien is withdrawn, but the silent lien still stays over your property. That happens in some circumstances, very rare. Then you get subordination, where the IRS agrees to take a second position on your property in return for either the bank doing paying the cash for the refinance to the IRS, or if you have a refinance situation where you're not going to get any money, but it reduces the payments so that you can pay more towards the IRS tax debt, that will also be a subordination. And finally, you could take advantage of this direct debit installment agreement if you owe $25,000 or less, and with 3 payments, you could have that notice of federal tax lien withdrawn. So those are all your options. In my next post, we're going to be talking about how to avoid a tax lien altogether. Hopefully you will understand after listening to these other posts about how bad a tax lien can be as far as a financial impact on your life. So, here's some ways you could avoid it altogether. With that, if you have any questions, certainly feel free to contact us. Happy to talk to you about your tax lien problem or any other problem you may have. With that, have a wonderful day.